Our next guest says that he is bracing for the markets to overreact to President Trump's tariffs on Canada, Mexico, and China, and would advise investors to buy the dip. Tom Lee is head of research at Fundstrat. He's also chief investment officer of Fundstrat Capital, as well as a CNBC contributor. And, Tom, there's not a huge dip here. We're talking about declines of 1.5% or less for the major averages at this point. Is that the dip you're talking about, or you think there's more overreaction potentially to come?
Overnight, it was actually, I think when futures opened, it was almost twice the decline. So the small caps were down 4, NASDAQ down over 3. It's good to see sort of markets are catching their breath. It's the second Monday shock, right? Last week was DeepSeek. Right. But I'd say actually it's almost a victory that if we open only down 1.5%, because I think there was quite a lot of panic over the weekend.
Yeah, look, the market to this point has kind of operated on the idea that this is a negotiation that's taking place, that these tariffs, if they are implemented, won't last for long. Is that your thought process as well still?
Yes, I'd say there's decent odds that, let's say we go 3 months out, that the tariffs will be rolled back because concessions were received. And there are also other mechanisms in place to sort of protect markets from the downside. I know people think this is an unlimited risk scenario for stocks, but if the tariffs come into play and other countries go into recession, those central banks will be easing, which will actually improve liquidity. So I'd say that as bad as things look, I do think there's downside protection.
What do you think our central bank will do in reaction to this? Because President Trump, a week and a half ago, or a week ago, weeks go by so quickly, maybe it was 2 weeks ago, said that he would like to see our central bank, along with other central banks, ease rates. Our central bank did not really seem to go along with that based on the numbers and the inflation data that they've seen.
Well, for the Fed, they'll have to tread carefully because in the short term, would be an inflationary impact. Mm-hmm. It may not change inflation expectations, but it's going to be realized inflation. So I do think it makes sense for the Fed to actually tread carefully. But if I was a central banker in a country that got hit with tariffs and they're getting pushed into recession, of course, they'd be easing.
You know, I think the market looks at this and thinks, well, President Trump likes a strong stock market. He likes to see those numbers on a daily basis. And maybe there's this sense that he will not get too stringent with things if he thinks that there's a big impact in the market. Do you think that too?
Yes. I mean, I think ultimately the goal of the President Trump is to make the U.S. stronger, both companies and the economy. There may be some short-term pain, and it's hard to tell how much of this is an investment in improving U.S. competitive positioning. I think it is kind of a test of resilience right now, and the fact that we're only down 1.5 percentage points mm-hmm. on pretty major universal tariffs is actually a sign of resilience.
A sign of resilience or a sign that we don't think it's going to continue? I guess that's my question.
It's hard to tell at the moment, but usually the market overreacts. So if this is the first reaction, I would probably guess that the second reaction is pulling back from some of that decline.
DeepSeek announced they trained their model at a fraction of the expected cost, casting shadows over tech titan Nvidia's stock, which tumbled nearly 20%. While some are quick to spot a disaster, others, like expert analyst Tom Lee, see a prime opportunity. Among the debated details, one fact remains unmissable. DeepSeek harnessed Nvidia's own GPUs for their breakthrough. Keep an eye on Nvidia. This could be the twist everyone's been waiting for. Welcome back to Investocracy.
Some of that decline.
Can I just ask you, it's both a sort of a combination market meets policy meets politics moment, which is, there's a sense in the market, I think, that this is some negotiation and something happens quickly. I don't know how quickly, though, we're talking about. And then the second order effect, not a second order, maybe first order effect is Americans like myself who love avocados. And right, when my avocado, I'm not joking. When the avocado costs, so much more than it did before, and not just avocados, but name, all this stuff that's going to happen in the supermarket. And I imagine
there are a lot of vegetables and fruits
in the next week, right? Like this is going to happen. Right. And then the question is, what kind of political pressure there's going to actually be on President Trump when the American public starts saying, I'm at the supermarket and this is not working for me? Or do you think that the American public is going to say, I'm willing to accept this pain? I have my Super Bowl party. I'm at my Super Bowl party, but I can't have all this stuff. Is that going to be okay? Because I remember being on TikTok during the Biden administration when people would go on from the supermarket and, say that the world was coming to an end because, eggs cost what they cost. So what say you?
I do think Americans vote with their wallet. So if they're feeling the pain, just like when they feel pain at the pump, it does affect confidence. And I think if people are feeling in their wallet what they have to pay, and, many Americans actually don't have an ability to absorb all these huge costs. So I think you're going to feel the pain.
Do you think the companies absorb the pain? Or do you think, that's the other thing about inflation, which is sort of an interesting thing. There's been these moments where some companies have absorbed the inflation. Some companies have actually done the exact opposite. They have exacerbated the situation because they said, well, look, if everything's going up, we should actually get ahead.
They have to raise their costs.
We got to get ahead of this thing now.
That's right. Greedflation was, I think, a bigger problem before. I think there is a lot more pushback, and it's going to be tougher for companies to pass on prices. But I'd also, take some of the executive order at face value. This isn't really about rewriting all of trade practices as much as it is trying to get Canada and Mexico to talk about the flow of illegal drugs and illicit chemicals, et cetera. So,
well, to be honest, he has to have that. He has to have a crisis at the border because otherwise it is Congress's place to raise tariffs. If it's an emergency situation, then he can declare an executive order. He says Europe is going to be next. What's the emergency that we say is the reason that we're raising tariffs on Europe?
Yeah, and maybe that's when the market will actually push back as well.
DeepSeek made jaws drop when it revealed that its large language model was trained for just $5.6 million. Yet, savvy investors would point out that this figure excluded some hefty costs. No mention of hardware or any pre-training expenses, a detail that seems to have been lost in the market's wild overreaction. Here's the twist in our tale. Nvidia's GPUs, specifically the H800 variants, played a key role in propelling DeepSeek's efficiency marvels. Nvidia was in on the action, albeit indirectly. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Semis are some of the hardest hit in the market today. The SMH ETF had been down more than 3%. There's, yes, global supply chain and demand concerns from these Trump tariffs. And while this round may not have had a direct impact, could chips be next? With the president repeating a pledge last week to tariff foreign-made chips after companies, quote, went to Taiwan. The Street's #1 chips analyst says tariffs are Trump's preferred way to boost the industry rather than stimulus like the CHIPS Act. Joining us now is Bank of America Securities senior semi-analyst Vivek Arya. Vivek, glad to have you here. I was very surprised that this area was the worst hit of the market today, with Nvidia down 5% in the morning. Why?
Thanks, Kelly. Thank you for having me. I think the industry is caught up in this, intersection of all the geopolitical nervousness. It's the DeepSeek concerns from last week. And it's an industry that has done very well over the last few years. So I would imagine that a number of investors own it as well. There is a fair bit of retail interest. So I think that naturally enhances the volatility of the industry. But let's take the news that has come out from tariffs. I think the cyclical part of the industry is exposed to it, as you said, indirectly. If, let's say, because of tariffs and the friction in the supply chain, if there is any reduction in volumes of cars and other industrial equipment from Canada and Mexico, there can be a concern. But when you look at the secular part of the industry, which has to do with the application of artificial intelligence and the use of servers, most server production has shifted to Taiwan, right? Some to Mexico. I think the customers who buy a lot of these products, for them, this is very mission critical to have in their cloud infrastructure environments. So we are assuming that the impact of this is notable in the near term, but should dissipate in the longer term.
Right. So do you think the near-term impact has more to do still with kind of the DeepSeek hangover? Or do you think it's really that people go, look, what happens if the president starts really tariffing Taiwan-made semis as all of them are?
Right. I think that, look, semiconductors is a global industry, and And there's a lot of kind of pools of excellence, right? There are certain companies who design these semiconductors extremely well, certain companies that manufacture them very well, certain who package them well. Japan is a great source of chemicals. So it's a global industry. It relies on inputs from many different companies coming together. So any kind of friction is not good for the industry. But we should, remember that this friction is nothing new. Back in the first term, remember there were a lot of restrictions that were put on the Chinese ecosystem, on Huawei as an example, and semiconductors over time powered through that. So our assumption is that this is another one of those times where when you do have restrictions put in this ecosystem, but the global demand for chips that enabled new markets and applications, whether it's in cloud computing or automotive or industrial automation, I think that secular trend does continue over the longer term.
Moreover, whispers of DeepSeek's potential consumer-focused impact do little to shake Nvidia's firm grip on the enterprise and commercial sectors. Questions circle about data security and the nuances between deploying open-source models for business purposes versus consumer experimentation. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make. So if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Is it going back to 140, or are we going to laugh to think it ever was a, almost $4 trillion company?
Sure. So first of all, Kelly, I think we are big believers in the fact that if one makes computing more efficient, we will use more of it. Right? If you look at the last 8 years or so, the capability of NVIDIA chips has gone up by a factor of 1,000 times. Right? Since 2018, the capability of their chips has gone up by 3 orders of magnitude. In that time, the revenue of their data center business has gone up by 300 times. Right? So just because the chip is made more efficient, or there are other efficiencies that come out because of software or operating systems or large language models.
DeepSeek's triumph doesn't spell doom. If anything, it heralds a broader acceptance of AI technologies, nudging Nvidia even closer to center stage. Forecasts for Nvidia's revenue remain bullish, with projections rising by 52% for fiscal 2026, thanks to unflagging demand for its GPUs. But what do you think lies ahead for this tech juggernaut? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.